Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Hyve Group, tickers HYVE. Price at the point of filing is $67.70. Description. This is not a recommendation, not advice. Please do your own diligence before investing into anything, and please write down in the comments below if you have invested, will invest, or why not into Hyve. Hyve Group PLC. Hyve is a small cap UK listed company that owns and organizes leading exhibitions and conferences. The business enjoyed significant momentum before the pandemic. The shares were added to the FTSE 250 index in January 2020 after doubling over the prior year. Few businesses were hit harder by COVID-19 than the exhibition industry. When COVID-19 hit, the business stopped and the share price was decimated, declining 90% to its current 67p. During a profoundly challenging few years that required a right issue, 126.6 million pounds, a share placement on 11/21, 28.1 million pounds, business interruption insurance collection received 106 million pounds, and recent refinancing on 10th 2022. The company has been repositioned by management. More recently, Hyve's business is inflecting strongly towards pre-pandemic levels. First half year 2022 was above 90%. Given healthy pent-up demand for its face-to-face events and its streamlined focus on market-leading shows in developed countries. In early October, the company announced its two most significant events: Autumn Fair and Grocery Shop, significantly outperforming prior editions, with a grocery shop reporting revenues 40% higher than its largest pre-COVID edition. The company also announced strong forward bookings into FY23. At current levels, Hyve offers an interesting prospective risk reward. Our thesis does not rely on M&A, but we would not be surprised to see a takeover of the company at a substantial premium. The UK is an attractive hunting ground for acquisitions as there are high quality companies that have significantly derated. UK small caps equities MCX index are down more than 25% in US dollars terms this year, with Hyve down 37% in US dollar terms. While a UK listed equity, the US accounts for approximately half of pro forma sales in early October 2022. Three insiders, chairman, CEO, and CFO, purchased shares at 54 pounds, I would assume. The company reports the results next week on 12th and 13th. Background and description. Hyve was founded by the Shashua family as International Trade Exhibitions (ITE) in 1991 and listed on the London Stock Exchange in 1998. The company initially focused on the new market economies of Russia and Commonwealth of Independent States. In May 2018, Hyve acquired the events business of Essential PLC for £300 million. Mark Shashua, Hyve's current CEO, returned to the business in September 2016 after serving from 2011 to 2016 as the CEO of Essential Events, where he doubled revenues and profits during his tenure. Back in mid-2017, when CEO Mark Shashua rejoined the business, Hyve embarked on a 3-year transformation and growth program, wherein management, number one, pruned the portfolio to focus on higher quality, market-leading shows. Number two, invested in creating a more unified, scalable platform to drive organic growth. And number three, began to pivot its geographical footprint from emerging markets to developed market geographies. More recently, Hyve acquired 121 Group and FinTech Meetup to bolster its omni-channel capabilities, allowing for a digital vertical community platform that complemented and reinforced their annual physical trade shows. Today, Hyve operates 50 in-person events focused on developed economies. Currently, 88% of revenues are in developed markets versus May 2017, when emerging economies represented 88%. Management has intentionally pivoted toward developed economies in recent years via strategic acquisitions of both market-leading shows and complementary digital assets, as well as divestitures, most recently exiting Russia and Central Asia and ABEC. The business today is geographically de-risked and operationally straightforward. Hive contracts for venues and then charges exhibitors for floor space and visitors for attending. Hive owns market leading shows across several sectors, including Shop Talk, shoptalk.com, Grocery Shop, Spring Fair, and BAT. Thesis: Hive has reshaped its portfolio to become a high quality exhibition business with growing market leading events in principally developed markets. We believe the current valuation at 7x, a recovered EBIT, is an attractive entry point to benefit from the company compounding out of COVID or receive an M&A premium. Underpinning our view of quality are the following considerations about Hive. Must attend market leading events with high barriers to entry. Strong ROI delivered to exhibitors, e.g., lead generation and attendees. Visibility and recurring revenue as attendees book well in advance to generate a repeat business. High operating margins, 25% pre COVID, and should be able to achieve such margins again by FY25. Strong FCF conversion and in normal environments benefits from negative working capital dynamics, given significant prepayments. Capital required limited to acquired assets, leading to high returns on capital over the cycle. It is difficult to predict M&A, but we would note that given quality and free cash flow characteristics of the business, there were numerous transactions pre-pandemic led both by strategic purchases, e.g., Informa, RELX Group, and financial sponsors, e.g., Clarison, Blackstone, Charterhouse, Providence, Veronis, Suler, HG Capital, etc. There has been M&A post-pandemic as well, with activity from Clarison, Blackstone, Emerald Expositions, Onyx, and Tarsus Charterhouse. Peer commentary supports event recovery. 11/14/2022, Informa on exhibitions. This performance, excluding China, is tackling to 85% plus minus of equivalent full year revenue in 2019, outpacing our own expectations at the start of the year. Growth has been consistent across all specialist markets and all geographic regions where COVID restrictions have been removed and are fully open. In the US, customer demand has been particularly strong as B2B activity has returned its pace, playing to the strength of our brand's leadership positions within key specialist markets and the scale of our overall business in the region. 11/3 2022 Emerald Expositions. We expect almost one quarter of our shows this year will meet or exceed pre-pandemic revenues, and while certain brands have a way to go, others are already well ahead. This is consistent with what we expected, as with what others in our sector are experiencing. These positive trends continue to validate the substantial value of our in-person shows. In contrast to business meetings, many of which have shifted permanently to virtual formats. In person B2B trade shows remain an essential part of customers' marketing and travel budgets. They provide a high return on investment and often are the single biggest selling event of the year. 11/3 2022 GES and exhibitions. GES posted a strong third quarter results as live event activity continued to improve, and we realized the benefit of improved cost structure. Same show revenues for events produced by our US exhibitions team grew up to 91% of 2019 pre pandemic levels, up from 46% in the 2021 third quarter. Valuation. While we believe it will take a while for the impact of COVID to leave investors' minds, we believe that there is room for Hive's valuation multiple to re-rate as it proves its recovery, which we expect in the next 1 to 2 years. Larger cap peer, Informa has already increased its rating to some extent and now trades at 14x EBIT. Given the attractive business model, Hive may make more sense within a larger group that has diversified revenues, making the company's financial profile attractive to an acquirer. Risks. Macro headwinds. During the GFC, the exhibitions industry suffered from declines in revenues as corporate rapidly pulled budgets. We believe the current recession will have a more muted impact because events have proven to a high ROI channel. Hive owns market leading events, which are more insulated versus second to third tier shows. Corporates have prepared for the recession and there are less sharp liquidity concerns. Second, a share price is concentrated. Some of these are long term holders, RVC partners 23%. Others, strategic value partners 16%, are more recent. Third, poorly received a pipe deal with PE. Hive has bolstered their balance sheet and is unlikely to need capital unless it were to make an acquisition. In May 2021, it was reported in the press that the company was in talks with Caroline about a £250 pipe. Any deal of this scale would require shareholder approval, which would be unlikely given the register concentration unless it was value enhancing. Balance sheet. As of 10th 23 2022, Hive has a net debt of £66.4 million, cash of £34.7, putting the company on track to be at lower end of previously stated FY 2022 guidance of 70 to 90 pounds a million pounds. Hive recently refinanced its debt at 7.75% over Sonia, which is a high rate, but the company believes incremental trading momentum will cover this debt service cost. Terms include a minimum liquidity covenant of 21 million pounds through 8th 23, and then a 3x leverage ratio. Catalyst earnings on 12/13. Thank you very much for tuning in. See you next time. Please tell me what you think of this idea. I want to invest into it just because of the industry. And I have a 10-year time horizon. I don't think that these type of events will be interesting then, or that interesting as they are now. So it's a declining market, and I'm not interested in that.